See, first of all, very good afternoon, all of you all. And yesterday we completed that concept of provident fund. Okay, so we are going to solve few questions on that concept today. But uh, before trying to solve those questions, what we are going to do, that we are going to recap the things so that little bit comfortable in solving the questions. Okay, number one, there are three types of provident funds. One, SPF, 2, RPF, 3, UPF. Meaning of these three funds I have already explained yesterday. Okay. So whatever provident fund is there, from that provident fund, some lump sum will come in the future. The accumulated balance will come in the future. And how that balance gets accumulated over there? Employee will every month contribute from his salary. Hello? Then employer will also contribute from his pocket. Regular basis, interest will be credited at a fixed percentage. Okay, no? On regular basis, the interest will be credited. So the amount keeps on getting accumulated. And this amount, which gets accumulated over the period of years of your employment with the employer, this amount will be given to you at the time of your retirement, if retirement happens prior to death, or at the time of death, it will become due and will be given to the legal heirs. See, whatever amount becomes due to the legal heirs, whatever amount which becomes due on the death received by the legal heirs will not be taxable at all. Okay, capital receipt, ignore. But whatever amount received by you on your retirement, that will be fully exempt. If it is coming from SPF, that will be fully exempt if it is coming from RPF also, provided you are covered in few situations which we discussed yesterday. 5 years or more you are supposed to work and then supposed to receive what? RPF balance. Then if you are not working for 5 years, you are leaving within 5 years, but the reason for leaving was not in your control. Okay, if the reason was in your control, you resigned, then don't worry, get the amount transferred to your new employer. Okay, not joining any employer, no problem. Get the amount transferred to central government's national pension scheme. In all these situations, the amount will be exempt. But if you are not covered under any of these situations and receiving what? RPF lump sum, that lump sum will not be exempt. Now that is treated as premature withdrawal. Yes or no? Premature withdrawal of RPF will be taxable in the same manner in which lump sum of UPF is taxed. And how the lump sum of UPF will be taxed? The amount which you receive on retirement or separation from the UPF. How that is getting taxed? In 4 parts. That entire lump sum will be divided in 4 parts. First one, employees' contributions. Ignore. Interest on employees' contribution, taxable under IFOS. Then employer's contribution and employer's contribution, interest on that employer's contribution will be taxable as your profit in lieu of salary. That we discussed yesterday. Okay. Then let's come to the part when you contribute. When you contribute, your employer contribute and the interest gets credited. What will be the tax effect of these things? Because see, the amount which you receive as a lump sum on retirement from the provident fund, that amount, to get that amount right now during the previous year or for these many years, you have to contribute from your salary. So whatever amount you are contributing out of your salary in your SPF, RPF or UPF, no effect to be given under the salary head. Why? Because that is already considered as a part of your salary. Hello? And if the salary is taxed, from that salary only this contribution is done. But for this contribution, you are going to get the deduction under section 80C. If the contribution is made to SPF or RPF. And if that contribution is made out of your salary to your UPF account, then you are not going to get any deduction under 80C. Okay. If employer is contributing to your SPF or he is contributing to your UPF, the entire contribution made by the employer during the current year will be exempt because that is neither due nor it is received. And as a part of lump sum, if it is received, it will be fully exempt if it is from SPF. But UPF is anyways taxed. Yes or no? But if your employer contributes to your RPF account, so any contribution during the previous year by the employer to your RPF account up to 12% of your salary will be exempt. Any contribution by the employer to your RPF account in excess of 12% of your salary will be treated as your salary. As per section 17(1), that excess contribution is your salary, and as per section 7, that is deemed to be received, hence it is taxable during the current year itself. Okay. Next one, interest is credited. Interest is credited to your SPF at whatever rate, whatever amount credited, fully exempt. Interest is credited to your UPF at whatever rate, whatever amount credited, fully exempt. But if the interest is credited to your RPF account and the amount is credited at a rate which is higher than 9.5% rate of interest, then whatever excess interest which is contributed at a rate higher than 9.5%, that excess amount of interest will also be treated as your salary. And as per section 7, that is deemed to be received, and that will also be taxable under the head salaries. This we have done yesterday. Okay. So now based on this, we are going to solve some questions. And once we are done with the questions, we will be solving what? ASAF concept. Sorry, we will be discussing ASAF concept and NPS concept. Once these two concepts are also done, the salary chapter will be over. Okay. So now let's come to the questions first. Please verify whether we have completed all the questions from 1 to 6. Please check. Illustration number 1 to 6. All the questions are done. 1 to 5, in fact. 1 to 5. And 6 is also done. This we have done yesterday only. Done, no? Any question remaining? All the questions done from 1 to 6. All the questions are done? Sure? Now, let's come to question number 7. See, in the question number 6 which we solved yesterday, in this question, this lump sum was coming from UPF, no? 6 lakh rupees. Do you remember this? And now in question number 7, they are saying, will your answer be different if the fund mentioned above was RPF? The answer is yes. If that lump sum on retirement is coming from RPF, then that lump sum will be fully exempt under section 10 subsection 12. All these 4 parts will not be taxable at all. It will be fully exempt, provided I am covered in those situations which we discussed in the last lecture. Yes or no? So, since the fund is a recognized one and the maturity is taking place after a service of 25 years, because in the question they have mentioned that, see, in the question they have mentioned that Mr. A is retiring after 25 years of service, meaning that after 25 years he is retiring and he is getting a lump sum. Lump sum from what? UPF? No. Now they are saying from RPF. So it was a service of 5 years or more, and after 5 years or more service, whatever lump sum you receive from your RPF will be fully exempt under section 10 subsection 12. Done, sir? So this question number 7 also done. Now coming to question number 8. Shall we start? Everyone, let's start now. Mr. B is working with XYZ Limited and has given details of his income for the previous year 24-25. You are required to compute his gross salary. What they are telling you to compute? Gross salary. From the details given below. Basic salary. Come on, tell me. Basic salary. Taxable or not taxable? Taxable, no? So 10,000 per month basic salary you are getting. For how many months you will get? 12 months. So this amount will be 1,20,000. So basic salary 1,20,000 will be taxable for you. Next one, come on. DA 50% of the retirement benefit. 50% is for retirement benefits, meaning that 50% in terms and 50% not in terms. So what is the DA? 8,000. Out of that, can I say 4,000 into 12 and 4,000 into 12? 48,000 here in terms, that will be taxable, and 48,000 not in terms, that will also be taxable. Done, no? So these two things done. Commission as a percentage of turnover 0.1%. And what is the turnover achieved during the year? 50 lakhs. So 0.1% of 50 lakhs will be how much? Come on, tell me. I guess it will be 5,000 only. 50 lakh into 0.1% will be 5,000. So 5,000 commission, turnover commission, will it be taxable? Yes, sir. Turnover commission 5,000 will also be taxable. Next one, bonus for 40,000, that will also be taxable, sir. Gratuity 25,000. Sir, gratuity, what do we do? Come on, tell me. Everyone, gratuity is exempt, no? But the gratuity which you receive on retirement or separation is exempt, friends. Are they telling you that the employee is getting retired? So definitely this gratuity is not received on retirement. This gratuity is received while you are in service. It will be taxable, fully taxable. I told you while we were doing the gratuity stuff. Do you remember that? Any gratuity received while you are in service will be fully taxable, whether you are a government employee or a non-government employee. But the gratuity which you are receiving as a death cum retirement gratuity on your retirement or separation will be exempt under section 1010. So if you try to take the exemption of this gratuity, you are gone. Will you take the exemption or you will show this gratuity taxable? Taxable. So this will also be taxable. Next one, his own contribution in RPF. You are contributing 20,000 to your RPF account. Now tell me from where you will contribute this 20,000. Definitely you are going to contribute this out of your 1,20,000 of salary. Yes or no? So from your 1,20,000, if you are contributing this 20, 1,20,000 is already getting taxed. So will you tax this 20,000 again under the salary head? No. Because this 20 is already a part of 1,20,000, already taxed. Hello, sir. But for this, will I get any deduction under ATC from GTI? Yes, because the contribution from my salary is happening in my RPF. That will allow me to take the deduction under ATC. Yes or no? So I will write down for own contribution of 20,000. It will be ignored under the head income from salary, not to be again considered as a part of salary. Okay, no? And I will take deduction under ATC for this. Now see, in the examination, no, they could have given a little bit different details. This basic salary 1,20,000, they would have given that it is a net salary. They would have given this is a net salary after deducting your PF contribution. Then what you would have done? We always charge gross salary. So to get that gross salary, whatever PF contribution got deducted, we would have added that and we would have shown the entire gross salary. Then that amount would have been included in the net amount of salary to get the gross amount, and that gross amount would have been taxed. Hello? Right now, nothing is mentioned. That means this basic is entirely gross only, no? And from that gross only, this contribution will go. Getting my point? So no need to give another effect. No need to give effect again under the head salary because it is already a part of your basic. Yes or no? You will take the deduction under ATC. Next one. Now employer's contribution to RPF. It is 20% of your basic salary. Sir, how much is your basic salary? It is 1,20,000. So 20% of 1,20,000 will be how much? Come on, tell me. 20% of 1,20,000 will be how much? It will be 24,000, friends. So your employer's contribution to your RPF is 24,000. Yes or no? Now we have to check whether the employer is contributing up to that limit of 12% or not. So we will have to calculate 12% of salary, friends. So for 12%, salary means what? Basic, DA in terms, turnover commission. Yes or no? So do you have basic? Do you have basic 1,20,000? Take 1,20,000 on your calculator. Do you have DA in terms? Yes, 48,000 was DA in terms. Add 48,000. And do you have turnover commission? Yes, sir. Turnover commission is 5,000, sir. So total is 1,73,000. This is your salary. Now 1,73,000 into 12%, you will get 20,760. So 12% of your salary. Can I say 12% of your salary? 12% of salary means basic, DA in terms and turnover commission. 12% will be 20,760, friends. So is your employer contributing this much amount or less than this? No. Employer is contributing more than this. Check. No. He is contributing 24,000. Is he contributing more? How much more? How much excess he is contributing? 24,000 minus 20,760 will give you 3,240. So can I say, therefore, excess contribution by employer to your RPF will be 3,240. My dear friends, this will be your salary. Hello, 3,240 will be your salary and deemed to be received as per section 7 will be taxable in this year itself. Will you be able to calculate this amount like this? Sure, everyone? Very good. Now see, employer's contribution 24,000 ignore, 20,760 ignore. This will be just for the purpose of comparison. Yes or no? We have to take 3,240 as what? Taxable. Now interest is accrued in your RPF at 13% per annum. Wow, the amount is 13,000. Friends, can you tell me, if the interest is credited at the rate of 13% and the amount of that interest is 13,000, interest credited to your RPF at a rate which is less than or equal to 9.5% or more than 9.5%. It is more than 9.5%. So if at 13% this much interest is credited, at the rate of 9.5%, how much should be credited? Can you calculate? At the rate of 9.5%, it should have been 9,500 only. If 13% is 13,000, how much should be 9.5%? Can you cross multiply? On cross multiplication, you will get this 9,500. Yes or no? So how much excess interest credited to RPF? That amount is 13,000 minus 9,500. That will give you 3,500. Everyone got this? This 3,500 excess interest credited to RPF is also your salary. And as per section 7, deemed to be received in this year, it will also be taxable in this year itself. Hello friends, did you understand? So now on your calculators, come on. You will take 1,20,000 as taxable. On your calculator, please keep on adding all these items. 1,20,000. Then 48. DA not in terms. DA in terms 48. Add that. 5,000 turnover commission. Add this. Then add 40,000 bonus. Add gratuity of 25,000. Then you will add 3,240 excess contribution to RPF by the employer and add 3,500 excess interest rated. On your calculator, how much amount you are getting? Come on, tell me. 298,740. Please check. 292,740. 292,740 you should get, no? Please add the amounts properly. 292,740. Got it, friends? Done? Should I move ahead with the next question? This question is done. Okay? So how to present this question? The presentation will be the same, which is given here. Okay? Now let's move on to the next question now. So till question number 8, 9 is also done. 10th question later on. 11, 12 done. 13th question is also done. 14th is also done. 15th is also done. 16th is also done. 17 also done. 18 also done. 19th done. Now 20th question. 20th. We did this question also, no? 20th question also done, no? 20th is also done. 21st also done. Come to 21st. 21st is also done. 22nd. That is also done. 23rd is also done. Ayyo, we have completed all the questions. Wow, wonderful. Yes, now come to question number 24. This question is very good question. Okay. Question number 24. Basic pay. Is it taxable? Yes. Dearness allowance? Taxable. Commission? Taxable. Entertainment allowance? Taxable. Medical expenses reimbursed? Taxable. Okay. Professional tax paid 2000. 1000 was paid by employer. So this 1000 which was paid by the employer is taxable for you. But in all, total 2000 is paid, no? So for this, you are going to get deduction under 16 clause 3. Provided you are not following 115 BSc. Done, no? Next one. Mr. Goyal contributes rupees 5000 towards RPF. Who contributes? Mr. Goyal, meaning the employee himself contributing. What will happen for this? Tell me. This will be allowed as a deduction under ATC, and he's contributing this amount out of his salary only, and salary is already taxed. Ignore this under the head salary. No need to give any other effect. Only take the deduction under ATC. He has no other income. Determine the income from salary. Very easy. If Mr. Goyal is a state government employee, he is a state government employee. So if he is a state government employee, is he going to get the deduction for this entertainment allowance also? Yes, 16 clause 2 also he will get. Okay. And how much deduction he'll get for entertainment allowance? 1/5 of basic. 1/5 of 4 lakh will be how much? It will be 80,000, or actual entertainment allowance 40,000, or maximum 5,000, whichever is lower. 5,000 deduction he is going to get. Okay. And 75,000 standard deduction also he is going to get. So see, default tax regime he is following. Oh, if he is following default tax regime under section 115 BSc, then only 75,000 he will get. He will not get those two deduction. But if he is not following default tax regime, normal provisions he is following, then he will be getting first deduction and second deduction and third. All the deduction he will get, and his income will be 6,59,000, which you also got. Since the question was silent that which tax regime he is following 115 BSc or not following 115 BSc. Hence the solution is given in both the ways. Okay. So if you follow 115 BSc, then this will be your final answer. 6,41,000. And if you don't follow 115 BSc, then this will be, yes, this will be your final answer. Got it, sir? Easy. Now, come to test your knowledge section. Test your knowledge. question number 1 is done, 2 is also done, 3 is also done. Now coming to question number 4. Let's come to question number 4. Have we solved this question or yet to be solved? Yet to be solved, no? Okay. Mr. Balaji, employed as a production manager in Beta Limited. He is a private sector employee. Furnishes you the following information for the year ended 31st March 2025. His basic salary up to 31st October 2024 is 50,000. So from April to October, how many months are there? 7 months. 7 months he is getting a salary of 50,000. So 50,000 into 7 will be 3,50,000. He is getting as what? Basic salary. Then from November his salary becomes 60,000. So from November till March, can I say for these 5 months he'll get 60,000 into 5, 3 lakh rupees. So his total basic which will be taxable for him will be 6,50,000. This basic salary will be taxable for him during the previous year. Now his salary is due and paid on the last day of every month. Fortunately, we have done the correct thing. If they would have told you that the salary becomes due on the first of the next month, then what would have been the answer over here? Then last year's March we would have taken in this year. That time we were getting a salary of 50 only. And this year's March we would have taken in the next year, not in this month. No, not in this year. So we would have done 50,000 into 8 and we would have done 60,000 into 4. If it was given that the salary becomes due on first of every month. Getting my point? But fortunately that is not given. Every month salary becomes due as on the last day of that month only. So starting from April till March, whatever salary is there for this year becomes due in this year and will be taxable in this year only. Yes or no? Next one. DA is 40% of basic salary. So can you take out 40% of 6,50,000? Yes, sir. 40% of 6,50,000 will be 2,60,000. 2,60,000 DA he is getting. Now, bonus equal to 1 month salary paid in October 24 on basic salary plus DA. So now tell me, what was the basic for October? It was 50. What was the DA for October? 40% of basic. So 40% of 50, which is equal to 20,000. So 20,000 plus 50,000 is equal to 70,000. This is the basic plus DA for the month of October, which will be given to you as what? Bonus. And this 70,000 is taxable. So how much amount is taxable? See, this basic will be taxable. This DA will be taxable. This bonus will be taxable. Yes or no? Easy? Next one. Now, contribution of employee to RPF account of the employee at 16% of basic salary. Now, what was the basic salary? Come on, tell me. 6,50,000 was the basic. So, 16% of that. So, can I say contribution is 16% of basic, meaning 6,50,000. And that amounts to 6,50,000 into 16%, 1,04,000. So the employer actually contributes 1,04,000. Now we have to check whether he is contributing up to 12% of your salary or more than that. So for that we will have to calculate 12% of what? Salary. And for this, salary means what? Basic, DA in terms, turnover commission. Now please pay attention. In this question, they have not mentioned that DA is in terms or not in terms. And there is no hint also, because of which we can treat it as what? In terms or not in terms, yes or no? So if nothing is given and no hint is given, we are free to assume anything. We are free to assume that it is in terms also, we are free to assume that it is not in terms. So here it will be more convenient for the purpose of calculations, it will be more convenient to assume that DA is not in terms, and which our institute has also done. In the solution, if you will see, no, the DA is assumed to be not in terms in the absence of any information. So what we are also going to do, we are also supposed to take DA not in terms assumption. Okay. So if DA not in terms is there, so first of all tell me, 12% we are supposed to take for basic plus DA in terms plus turnover commission. That will be the salary for the purpose of calculating 12%, no? For the purpose of calculating 12%, 12% of what? Salary. And salary means what? Basic DA in terms turnover commission. So what was basic, sir? It was 6,50,000. What was the DA in terms, sir? Nil. Because we are assuming that the entire DA is not in terms. Yes or no? And what is the turnover commission, sir? Nil. Fortunately, what did I say? Fortunately, this salary will also be equal to basic salary. Amounting to 6,50,000. Hello. So 12% of 6,50,000 will be how much? 78,000. So employer should have contributed 78,000. Everyone. Is he contributing 78,000 or more than that? More than that? How much? $26,000. So can I say 26,000 will be the excess contribution by the employer to your RPF account, and this amount will also be taxable under your salary head. Understanding? Sir, if I would have assumed that DA was in terms, then pay attention everyone. If you would have assumed that DA was in terms, then 6,50,000 plus DA you would have written. Understanding? So 6,50,000 plus how much was DA? 2,60,000, and it was 9,10,000. 12% of 9,12,000 will be 1,09,200. Hello, sir. So 1,09,200. Here we would have got what? If you would have taken 2,60,000 also, then the salary would have been something, and on that 12% would be 1,09,200. So is the contribution more than 1,09,200? The answer is no. If the contribution is not more than 1,09,200, then nothing will be taxable. Employer contribution 26,000, nothing will be taxable. Why? Because the contribution of 1,04,000 is within the limit of 12%. Hello, sir. In the question, are they telling you that what is DA? No, nothing is mentioned. So you are free to take any of the assumptions. Got it, sir? Should I move ahead? Next one. So then excess contribution would have been nil. Nothing would have been taxable. Both the answers I have calculated in front of you. Okay. Now professional tax paid 2,500, of which 2,000 was paid by the employer. First of all, this 2,000 which was paid by the employer will be taxable as your salary. And later on, this 2,500, for this you are going to get what? For this 2,500 you are going to get deduction under section 16 clause 3. Provided you are not following 115 BSc. Okay. Next one. Facility of laptop and computer was provided to Balaji for both official and personal use. Cost of laptop 45,000 and cost of computer 35,000 were acquired by the company on, see, company acquired laptop and computer. These laptop and computer are not sold to you. They are given to you for use. Facility of use is given. And did I tell you that if you are given any asset, any movable asset for use, that is a taxable perquisite for you, except laptop and computer. If the laptop or computer is given for use, that facility, that perquisite is fully exempt. So there is no need to take these two amounts. These will not be useful for us because the entire value is going to be what? Exempt. So here the taxable value will be nil. Everyone got this? Hello, sir? Okay. Were you able to identify this? Perfect. Motor car owned by the employer, cubic capacity engine exceeds 1.6 liter, meaning greater than 1600 cc, provided to the employee from 1st November 24, meant for both official and personal use. Repair and running expenses of rupees 45,000 from 1st November 24 to 31st March 2024 were fully met by employer. Use plus expense, both the benefits happening, minus recovery if any. This amount will be fully exempt if the car is fully official. This amount will be fully taxable if the car is fully personal. But the car is partly official, partly personal. This amount will be ignored. A flat amount will be taxed. Did I tell you? How much? 1800 or 2400. In our case, it will be 2400 per month. But wait, driver is also given? No, it was self-driven by the employee. If the driver was given, then I would have taxed 900 extra. Yes or no? So what I will be doing? I will be taking 2400 per month into how many months? For the full year it is given, or November to March only. So November to March only 5 months. So benefit happens for 5 months only. So 2400 into 5 will give you 12,000 rupees. This will be the taxable value of this perquisite. Done, sir? Okay, very good. Leave travel concession given to employee, his wife and 3 children, 1 daughter aged 7 and twin sons aged 3. Yesterday only we have done something like this. Twins after the first child treated as single. So all the children born on or after 11098, and out of 3, 2 LTA for 2 can be exempt. But in our case, LTA for all the 3 children will be exempt because multiple births after one child treated as single only. So LTA for all the children can be exempted. LTA for Balaji and his wife also can be exempted. Yes or no? Now pay attention. Cost of air tickets. Cost of air tickets, economy class, reimbursed by the employer, 30,000 for adults and 45,000 for 3 children. Can I say the entire benefit will be exempted? 30,000 plus 45, 75,000 LTA received. Now exempt under section 10(5). How much? Actual amount 75. Actual amount spent. The cost of the ticket was 75 only, which he had spent, which got reimbursed. Yes or no? So 75,000 actual amount also. And maximum limit as per rule 2BA. Do you remember that? Economy class airfare. So what was the economy class airfare? 75 only, no? So 75, 75, 75. Whichever is lower, 75. How much you have received? 75. How much will be taxable? Nil. Entire LTA will be exempt. Got it? Next one. Balaji is eligible for availing exemption in this year to the extent it is permissible in law. Very good. He is eligible to take the exemption. He took the exemption, and what is the amount? Nil. Compute the salary income chargeable to tax in the hands of Mr. Balaji, assuming that he exercises the option to shifting out, meaning not following 115 BSc. Yes or no? On your calculators, come on. Take your calculators. Take 6,50,000 basic as taxable. 2,60,000 as taxable. Take 70,000 as taxable. Okay. Then take 26,000 as taxable. See, if you take the DA not in terms, then 26,000 is taxable. But if you assume that DA is not in terms, in terms, then your amount here will be nil. Excess contribution will be nil. Then 26,000 will not be added. Okay, no? Hello. Next one. 2,000 rupees. Employer paying your professional tax is also your income. Add 2,000. Then add nil. Then add 12,000. Then add nil. On your calculator, how much amount you are getting? Tell me. 10,20,000, everyone getting that? Out of that 10,20,000, you are going to get first deduction 50,000 standard deduction. Reduce 50,000. Then second deduction entertainment allowance you are not going to get because you are not receiving entertainment allowance also. If you would have received, still you would not have got because you are not a government employee. Can you get the professional tax deduction? Yes, 2,500. Reduce 2,500 also. So out of 10,20,000, reduce 52,500. How much you are getting? 10,20,000 minus 52,500, you will get 9,67,500. Everyone getting this? Please check the final answer. Final answer 9,67,500. Are you all getting it? Can you see? This is your question number 4. And final answer is 9,67,500. And see, here they have also charged 26,000, meaning that it is assumed that DA does not form part of salary for computing retirement benefits, meaning that the assumption is DA not in terms. If you assume that DA in terms, then in your calculation here 26,000 will not come and accordingly the amount will change. Yes or no? Then 9,67,500, 26,000 more. So 9,67,500, 26,000 will be 993,500. In that case, your taxable salary will be 993,500. Getting my point? Should I move ahead? Question number 4, done. Next one. Come to question number 5. Question number 5. From the following details, find out the salary chargeable to tax. You are supposed to calculate the salary chargeable to tax, meaning after deduction and everything, net salary for the assessment year 25-26. Assuming that the assessee exercises the option of shifting out of 115 BAC, meaning 115 BAC is not followed. Okay. Now, Mr. X is a regular employee of Rama and Company in Gurgaon, meaning that he is a non-government employee. He was appointed on 1st January 2024 in the scale of 20,000, 1,000, 30,000. Now, from this, I will have to first calculate his basic salary. So, from 1st of January 2024 till 31st December 2024, his basic salary would be 20,000 per month. If nothing is mentioned that at the time of joining how much his salary was fixed, I will consider that in that scale the minimum salary he is getting at the time of joining. Yes or no? So when he joined, his salary was fixed at 20,000. Done? So this 20,000 salary he is getting. In the second year of his service, which will start from 1st January 2025 and it will be till 31st December 2025, he will be given an increment of 1,000. See, 20,000, 1,000, 30,000 means 1,000 rupees increment. Meaning that for next year of his service, he is going to get 21,000 per month as salary. Okay, 21,000 per month. So can I say my April month will come here? 1st April 2024 will be between any of these 2 days and 31st March 2025 will be between these 2 dates. So my previous year is this. So in my previous year, can I say from April to December, his salary is 20,000. So 20,000 into 9 months. And from January to March, meaning 3 months, his salary is 21,000. And if nothing is mentioned, we are going to assume that the salary becomes due as on the last day of each month. Yes or no? So 20,000 into 9 will give me 1,80,000, and this will give me 63,000. So total is 2,43,000. Everyone got this 2,43,000? Okay. So I will say that 2,43,000 basic salary taxable. Now 10% is DA. And if nothing is mentioned, DA can be in terms, that can be not in terms also. Yes or no? So we will say that DA is in terms. We will assume DA in terms. Okay. So 10% will be 24,300, and that is DA, that will be taxable. Now bonus equivalent to 1 month pay. Bonus equivalent to 1 month pay based on the salary of March every year. Now tell me, this year March salary was how much? This year March salary was 21,000 only, no? So March month salary, basic salary will be given as what? Bonus. So that 21,000 will be the bonus for this year, and that will be taxable. Now this information is important. This one. He contributes 15% of his pay and DA towards his RPF, and the company contributes the same amount. Now see, wait. This is a hint that DA is provided in terms. Because if the employer is contributing the same amount which you are contributing, and how much you are contributing? 15% of your basic and DA to your provident fund, RPF, and the employer is also contributing the same, meaning he is also contributing 15% of your pay and DA. Don't you think provident fund is a retirement benefit? And for the purpose of retirement benefit, whatever salary is taken, and in that salary, if the DA forms part of that salary, meaning that the DA is given in terms. Hello, sir. Getting my point? So DA is in terms. This is a hint. Hence, we are assuming that DA is in terms. Understanding? Sure? Okay. Now see, this is employees' contribution. Employees' contribution is how much? 15% of his basic and DA. So what is basic and DA? 2,43,000 plus 24,300 will be 267,300, and 15% of that will be 40,095. This is the employee's contribution. From where he will contribute this? From his salary only he is going to contribute. So salary is already getting taxed. So no need to give second effect to this under salary head. What we are going to do? We are going to take deduction of this amount under section 80C. From GTI, we will take this as a deduction. But is your employer contributing the same amount? So can I say even the employer's contribution to your RPF will be 15% of your pay and DA? Yes or no? And employer is also going to contribute 40,095 only. But how much the employer can maximum contribute? Employer can contribute 12% of your salary. So the maximum amount which the employer can contribute is 12% of salary, not pay and DA, salary. If I would have been your examiner, no, what I would have done, in that DA, I would have told 50% in terms, 50% not in terms. So while calculating 15%, you are supposed to take full DA. Hello? Because it is 15% of pay and DA. But while calculating 12%, you should be taking only DA in terms as a part of salary. Getting my point? Everyone? So what do I do here? 12% of basic 2,43,000 plus DA in terms. Fortunately, entire DA is in terms. Yes or no? 24,300 and turnover commission which happens to be nil. Now tell me, fortunately this amount is also same as the earlier amount. This and this will be same. Getting my point? What if DA, out of this DA, half was in terms and half was not in terms? Then here you would have taken only the half DA which is in terms. And turnover commission was also given in the question. Then here the turnover commission would have been taken. So basic DA in terms, turnover commission, add all of them, 12% of that is the maximum limit. Done. Maximum students commit mistake in these type of things. Will you commit? Or you understood what is to be done and what is not to be done? Sure, no, everyone? Okay. So tell me, this will be how much? 32,076. Your employer can contribute maximum this much. And he is contributing this much. Is he contributing excess? Is your employer contributing more than 12%? Yes. How much? This minus this. You will get 8019. 8019 is the excess contribution by the employer to your RPF. So what I'll do here, 8019 is the excess contribution by the employer that will be taxable. Sure. Next one. Now DA forms part of pay for retirement benefit. See, they have also said this. Did you see? In the question only they have written DA forms part of retirement pay. And that is the reason why employer is also contributing 15% of your pay and DA as his contribution. Got it? Next one. He is provided free housing facility which has been taken on rent by the company at 10,000 per month. A non-government employee getting rent-free accommodation from his employer without furniture, meaning he is getting rent-free unfurnished accommodation. So accommodation value has to be calculated without furniture and without any rent. Hello? And that value will be taxable. And that value should be 10%, 7.5% or 5%. No. Because the accommodation is not owned by the employer in a city where the population is more than 40 lakhs, more than 50. Accommodation is taken on rent by the employer and given to you. So for such type of accommodation, 10% of salary is taken or actual rent paid by the employer, whichever is lower. So what we are going to do here, we are going to take for this housing facility, we are going to take 10% of salary. And for this, we'll have to calculate salary also. Or actual rent paid by the employer happens to be how much? 10,000 into 12. 10,000 per month into 12 months, which will be 1,20,000. Now we are supposed to first calculate this salary, and based on this salary, we are going to get this amount also. But till the time the entire question is not solved, we are not going to be able to calculate this salary also. So first let us complete all the other things, then again we'll come to this part and we'll value this perquisite. So this perquisite will be calculated in the end. I will come and put that amount over here. Okay. Next one. Come on. Facility of laptop costing 50,000. 50,000 cost was there for the laptop, and that laptop is given to you. Is it sold to you or given to you? Facility of laptop means use of laptop. Use of computer laptop whose cost is 50 will be a fully exempt perquisite for you. So ignore this cost and take the benefit as exempt, nil. Yes or no? Next one. Company reimbursed the medical treatment bill of his brother of 25,000 who is dependent on him. Hello? Medical treatment bill for dependent brother will be exempt perquisite provided the treatment is done in India in GRE. Treatment is done in India. But are they telling you that this treatment is done in GRE, government hospital, recognized hospital, employer hospital? No. Then this benefit will be fully taxable. Even if it is for dependent brother, it will be fully taxable. How much will be taxable over here? 25,000 will be taxable. Yes or no? Next one. The monthly salary of 1,000 of housekeeper is reimbursed by the company, meaning that housekeeper was engaged by you. Domestic servant was engaged by you. And his monthly salary of 1,000 multiplied by 12,000 was reimbursed by the employer, meaning your obligation met by employer. Clause 4 perquisite, even if you are a non-specified employee, will be taxable for you under clause 4. Hello sir, understanding? So come on, next one. So 12,000 will be taxable here. Got it sir? Now a gift voucher of 10,000 on the occasion of his marriage anniversary was given by the employer. So this 10,000 will also be taxable as your perquisite. Conveyance allowance of 1,000 per month is given by the company towards actual reimbursement of conveyance spent on official duty. Wait, conveyance allowance is given equal to the amount spent on conveyance while you are on official duties. Hello sir. Allowance, conveyance allowance received will be exempt to the extent spent under section 1014. Do you remember? You are getting only that amount which is spent by you. Hello? So amount received is spent will be fully exempt. So the amount which is spent only you are receiving fully exempt. No? Hello? Under which section? 10 subsection 14. And see, this 1014 exemption will be available even if you follow 115 BSc. Traveling allowance, daily allowance and conveyance allowance will be exempt under section 1014 under both the regimes. If you follow 115 BSc, then also they are exempt, and if you are not following 115 BSc, then also it is exempt. Hello? Everyone got it? So how much will be exempt? 1,000 into 12, conveyance allowance received. And this entire amount was spent only, that which you are receiving, no? So fully exempt. Nothing will be taxable over here. Nil. Next one. He is provided personal accident policy. For that personal accident policy, premium of 5,000 is paid by the company. So any personal accident policy premium paid by the employer for you will not be a perquisite for you, will be fully exempt. Yesterday only we have had this discussion. This will be fully exempt. Nothing will be taxable. He is getting telephone facility or telephone allowance. If he would have got this telephone facility, meaning perquisite, then the amount would have been fully exempt. Mobile bills, telephone bills paid by the employer, reimbursed by the employer, telephone facility given, mobile facility given by the employer, then it would have been fully exempt. But is it a telephone or mobile facility or telephone or mobile allowance? Allowance. It will be fully taxable. 500 into 12 will be 6,000. So have you received all the amounts? Now only one thing is pending, RFUA, rent free unfurnished accommodation. For that RFUA you need salary. So in your salary, now keep on telling me, will you take basic? Yes. Will you take DA? Yes. If it is in terms, DA not in terms, not to be taken. So DA in terms is there, no? So we'll take DA in terms. Then will you take bonus? Yes. Will you take employer's contribution 8019? No, 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 no. To value the perquisite RFUA, the salary does not include what? Employer's contribution to PF, which is 8019. Will you take it as a part of this salary? No. So to calculate this 10%, we are calculating the salary, and in that salary, you will take basic, you will take DA in terms, you will take bonus, but you will not take employer's contribution to provident fund. And also you will not take any other perquisite, value of any other perquisite you will not take. Hello sir, value of other perquisite, but you will take the taxable portion of allowances. Exempt portion of allowance you will not take, but taxable portion of allowance you will take. So whatever tick marks are there, add all of them, you are getting what? Salary. So how much salary? 294,300 you should get. Please check. 2,43,000 plus 24,300 plus 21,000 plus 6,000. You are going to get 294,300. So this is your salary. 294,300. 10% of that will be how much? 29,430. So 29,430 or 1,20,000, whichever is lower, tell me. 29,430 will be the lower amount, and that is your RFUA, rent-free unfurnished accommodation. The taxable value of that perquisite will be 29,430. Yes or no? Now on your calculators, add all these amount. Now you will take 2,43,000 plus you will take 24,300 plus you will take 8,019 plus 29,430 plus 25,000 plus 12,000 plus 10,000 plus 6,000. You are getting 357,749. Getting this amount or other amount? Wait, how much? 2,43,000 plus 24,300 plus 21,000 plus 8,019 plus 29,430 plus 25,000 plus 12,000 plus 10,000 plus 6,000. 378,749. 378,749. Okay, 378,749 will be your gross taxable salary. Are you following 115 BSE? No. So you will get 50,000 standard deduction also. No entertainment allowance deduction, no professional tax deduction. Okay, so reduce 50,000. You will get 3,28,749. This is your net taxable salary. Please check the solution. Final answer. $328,749. Got it, sir? Easy. 4 or 5 places are there in this question where you can commit mistake. 1. That basic salary calculation. 2. RFUA calculation. 3. Employer's contribution to Provident Fund. Then 4. Conveyance allowance. You did not get what it is actually. Okay. And one more place where you can commit error is, no, there is no other thing where you can commit mistake. So these 4 places are there in this question where you can commit mistake. You might have done any one of these mistakes, I guess. Understood the entire question? Understood the entire solution? Okay. So test your knowledge. All the questions are done, or one question still remaining? All the questions done, no? 1 to 7, all the questions we have completed. 5th question. This was the 5th question we did, no? Okay, yes. 6th question. Have we done this 6th question, everyone? No? Okay, let's start with the 6th question. See, you are required to compute the income from salary of Mr. Raja under default tax regime, meaning that Raja is following 115 BAC. You have to be careful now. Okay. See, he retired on 31st of December 2024 at the age of 60 after putting 25 years and 9 months of service from a private company at Delhi. Okay. He was paid a salary of 25,000 per month and HRA of 6,000 per month. Can I say 25,000 per month salary, basic salary, he is going to receive from April to December only. 9 months, because he is retiring on 31st December. So 25,000 into 9, he will get 2,25,000 as basic salary. That will be fully taxable. Now, is he receiving HRA also? Yes, sir. He is receiving 6,000 rupees as HRA. 6,000 into 9 will be 54,000 HRA. And under the default tax regime, HRA exemption under section 1013A is not available, meaning that entire HRA will be fully taxable. Getting my point, everyone? So here it will be 54,000 HRA fully taxable. Now today at home, you are supposed to solve the same question, assuming that he is shifting out of 115 BSc. And in that case, you will calculate HRA exemption also. Hello, sir. But here we are not calculating HRA exemption. Why? Because he is not following 115 he is following 115 BSc and his HRA in that case is fully taxable. Okay. So the rent paid by him during his tenure, service tenure will be irrelevant for us. Next one. On his retirement, he was paid gratuity of rupees 3,50,000 and he was covered by payment of gratuity Act 1972. He had not received any other gratuity at any point of time earlier other than this gratuity, meaning that full 20 lakh rupees of limit of gratuity is available to him. Yes or no? So can I say, if I'll calculate the gratuity exemption, so the amount of gratuity which he is receiving is 3,50,000 and he is covered by POGA, meaning that he will get the exemption under section 10 amounting to how much? A. Actual gratuity received. B. Full limit of 20 lakhs because he has never claimed this exemption earlier. Yes or no? And C. Now 15 by 26 of last drawn salary per month for 26 years of service. 25 years, 9 months will be taken as 26 years. Getting my point? And last drawn salary will take basic of last month as well as DA of last month. No DA is there, sir. Only basic is there. So entire basic will be his last drawn salary. So what was the basic in the last month? It was 25,000 only, no? Getting my point? So it will be 25,000 into 26 years. So 25,000 into 15. Because 26 will get cancelled. Okay, no? 3,75,000. Now tell me which is lowest out of all? 3,50,000 is lowest. So 3,50,000 will be exempt. Tell me how much is the taxable gratuity? Nil. So here I will say his taxable gratuity will be nil. Done? Next one. He had accumulated leave of 15 days per annum. Accumulated leave of 15 days per annum. How many years he is working? 25 years, 9 months, ignore 9 months. For completed 25 years. Every year he has accumulated a leave of 15 days. Meaning leave saved every year. 15, 15, 15, 15. Leave allowed minus leave taken. Accumulated leave 15. Leave allowed minus leave taken. 15 accumulated leave for all the years of his service. So can I say 15 days per annum, meaning that 15 into what? 25 years will give 15 into 25 will give 375 and that I divide by 30. So 375 divided by 30 will give me 12.5 months. So leave credit, leave balance, accumulated leave at the time of his retirement is how much? 12.5 months. And for this 12.5 months, he is getting a leave salary of 3,15,000. 3,15,000 is his leave encashment at the time of retirement. Hello, sir. Now this 12.5 months, meaning that this 15 days is based on leave allowed by employer 30 days. So every year employer was allowing 30. Out of that you were taking 15 and 15 days was saved. Next year also 30. You were taking 15 days leave, 15 days saved. Likewise, for 25 years, 30 days leave allowed, 15 days leave taken and 15 days leave saved. Getting my point? So 15 days leave saved multiplied by 25 years will give you what? 375 divided by 30. It will be 12.5 months leave credit. And for this leave credit, he is getting a leave salary of 3,15,000. But wait, this is the leave credit as per employer's rules, which was allowing you 30 days. What would have been the leave credit if you would have calculated that leave credit as per IT rules, leave allowed? IT rules leave allowed is also 30. So based on that, the leave credit would have been same, no? 15 days every year, meaning that 375 days, meaning that 12.5. So this 12.5 is as per employer's rule also. This 12.5 is as per IT rules also, meaning that for the purpose of claiming the exemption also, I will take the same leave credit. Getting my point? So now tell me, 3,15,000 was your leave credit on leave salary on retirement. Will it be exempt? Yes, it will be exempt under section 1010 AA. How much exempt, sir? A, actual leave salary. B, maximum leave credit, leave salary allowed is 25 lakhs, maximum limit. C is 10 months salary. For that, I will have to take the average salary of last 10 months, including the month of retirement. So month of retirement is December, this month and earlier 9 months. All the months, I will have to take basic DA in terms turnover commission. 10 months salary divided by 10, I will get average salary. That average salary multiplied by 10, yes or no? So 10 months salary, meaning 10 months average salary. 10 months into average salary. So what is the average salary? Basic DA in terms turnover commission of the last 10 months divided by 10. What was the basic in last 10 months? 25,000. Into 10, 2,50,000. What was the DA in terms? Nil. What was the turnover commission? Nil. So 2,50,000 plus nil plus nil. Total 2,50,000 divided by 10 will give you average salary also 25,000 per month. Hello, sir. So that will be 25,000. And now D is leave credit, which was 12.5 months into 25,000 per month. This will be 2,50,000. This will be 25,000 into 12.5. This will be 3,12,500. Whichever is lower. Come on, tell me, what is the lowest one? 2,50,000 is lowest. So out of this, 2,50,000 will be exempt. So 65,000 leave encashment or leave salary will be taxable on retirement. Yes or no? So I will write down 65,000 over here. How many of you committed mistake here? Understood what mistake was there? How many of you did mistake in gratuity? I guess nobody would have done. Gratuity was correct. Or gratuity also committed mistake? No, na? Very good. Okay. He is receiving 5,000 as pension. On 1st February 2025, he commuted 60% of his pension and received 3 lakh as commuted pension. Please pay attention. 5,000 per month he will get for January. Only 1 month. So this is uncommuted pension for the month of January. And February and March also he was supposed to get 5,000 per month also only. But he commuted 60% of this for a lump sum of 3 lakhs. Meaning that now for the month of February and March, he is not going to get entire 5,000. He is going to get only 40%, which is still uncommuted. Yes or no? So into 40% into 2 months. So it will be 5,000 into 40% will be 2,000 into 2 will be 4,000. So 5 plus 4, 9,000 will be his uncommuted pension, which will be taxable here. 9,000 uncommuted pension taxable. Done? Now, is he receiving 3 lakh rupees commuted pension? Yes, sir. So now commuted pension 3 lakh rupees he is receiving. And do you remember commuted pension is exempt under section 1010A? How much is exempt? A, actual amount of commuted pension, or B, maximum 1/3 of fully commuted pension. Why 1/3, sir? Because on retirement is getting gratuity also. So a non-government employee on retirement who is receiving what? Gratuity also, his commuted pension will be exempt to the extent of maximum how much? 1/3 of his fully commuted pension. So tell me, 3 lakh is received after commuting 60%. So is this 3 lakh fully commuted or partly commuted? Partly. So if on 60% commuting you are receiving 3 lakh, how much will you receive if you commute entire 100%? So can I say 3 lakh divided by 60 into 100 will be your fully commuted pension? So this will be 5 lakhs. 1/3 of 5 lakhs will be 1 lakh 66, 667. Everyone got this? So either 3 lakh or 166, 67, whichever is lower. So this amount is lower. Out of 3 lakh, this amount will be exempt. So the taxable amount will be 1,33,333. Everyone got this? Anyone committed mistake here? No one? Sure? So I will write down 1,33,333 as what? Commuted pension, which is taxable. And how I am deriving these taxable amounts? That you just have to show in the calculation. That's it. Okay, no? Very good. Now the company presented him gift voucher of 5,000 on his retirement. Is the amount more than 5,000 or only 5,000? Only 5,000. So any gift in kind up to 5,000 is not taxable coming from the employer, yes or no? So nothing will be taxable. No gift will be taxable. But his colleagues also gifted him mobile phone worth 50,000. Colleagues means the gift is not coming from the employer. So this cannot be income from salary. But it can be income from other sources. But under income from other sources, it will not be taxed because gift of mobile phone is not a specified asset. And also the amount of gift is not more than 50,000. There are two reasons why this cannot be income from other sources also. First, this is not a gift of specified movable asset. Second, the amount of gift taxable under the head IFRS will be only when that amount is more than 50, but it is not more than 50 also. So this will not go to IFRS. Nothing will be taxable in IFRS. This gift is fully outside the income tax net. So if someone wants to give you a gift, ask the gift of any asset which is not a specified movable asset, and tell that person to give you the gift which is not more than 50,000. Only then that gift will not be treated as your taxable income under the head IFRS. Yes or no? Sure? Okay, very good. Now the entire thing is done. Now do one thing on your calculator. Take 2,25,000, 54,000, nil, 65,000, 9,000, 133, 333. Add all these amounts. 2,25,000 plus 54,000 plus 65,000 plus 9,000 plus 133, 333. 486, 333. Everyone getting this? So that 4,86,333 is your gross taxable salary. And out of that you are going to get only one deduction, that is 75,000 standard deduction. Reduce 75,000, you are going to get 4,11,333. Got it? Please check the answer. 4,11,333. Are you getting this or not? Sir, 4,11,333. Final answer. Sure, sir. Now wait. The answer to this question will change. This amount will change if you follow 115 BSc. Sorry, if you don't follow 115 BSc, because this is 115 BSc, no? How that will change? Please pay attention. See here. Basic salary will remain same. But now this 54,000 HRA will not come. You will get the exemption. Let's calculate that also. Sure? Okay, let's calculate. HRA tell me, if I say 54,000 HRA received, out of that 1013A exemption will be available if you don't follow 115 BSC. How much will be exempt? A, actual amount 54,000, or B, sir, for B I have to take 50% of salary or 40% of salary depending on the fact that where I am paying rent. Sir, I am paying rent in Delhi. See, the employee is living in Delhi, paying the rent in Delhi. Given in the question, yes or no? With HRA point only they are saying that he is paying 6,500 rupees per month as rent in Delhi. Did you see that? Yes or no? Tell me. Did you find Delhi anywhere in the question? Got it? No. It is given in that HRA point only. He is paying 6,500 per month in Delhi only. So rent is paid in metro. And if rent is paid in metro, the limit B will be 40% of salary or 50%. This will be 50% of salary. And for this salary, you need basic DA incomes and turnover commission for becoming due in all those months in which you have paid the rent. So for how many months you have paid the rent? April to December. So April to December, whatever salary becoming due, meaning whatever basic, whatever DA incomes, whatever turnover commission becoming due. Turnover commission, nothing. DA in terms, nothing. Turnover commission, nothing. DA in terms, nothing. But basic is there, no, in these 9 months. How much? 2,25,000. So 2,25,000 plus 0 will give you 2,25,000 salary. And 50% of that salary, 2,25,000 divided by 2 will give you 1,12,500. Everyone got this? And C will be rent paid, which is 6,500. That you have paid for 9 months. Yes or no? 58,500. Minus 10% of salary. 10% will be 10% of 2,25,000. 10% of 2,25,000. So that will be 22,500. So 58,500 minus 22,500 will give you 36,000. A, B, C, whichever is lower. Come on, 36,000 will be exempt out of 54. So your taxable HRA will be only 18,000 in that case. Sure? And this will be only done if you are shifting out of default tax regime. So here your answer will change and it will come to 18,000 if you don't follow 115 BSE. Yes or no? So only this will change. This will remain same. This will also remain same. This 9,000 will also remain same. This will also remain same. This will also remain same. This will also remain same. Nothing will change. Only that HRA part will change. So now can I say this 486 will also change? So 486, 333, in that you have added 54, no? So reduce 54,000 and add 18,000. Your salary in that case will become 4,50,333. And now you are going to get a standard deduction of 50,000 only. Hello, sir. So tell me, your salary will be 4,333. This will be your final taxable salary. Got it? So the same question can be solved in two ways. One way you have solved and second way I have solved here with you. Done? Should I move ahead? So this was the end of all the questions. You won't believe that we have solved approximately 30 questions. Illustrations, practice question, all taken together we have solved 30 questions. And two more questions are remaining. One question, question number 10, and second question, question number 25. These two questions will be done at the end of the syllabus. When I will be teaching you relief under section 89, relief will be taken in the end. And second thing also I will be taking in the end, that will be that 17 subsection 2 clause 7 and 7a. the calculation of that perquisite, which is there in that question number 10. See, that calculation is very complicated, okay? And I don't want you all to have your mind stuck into that right now. And even if I'll be doing that right now, no, by the time we'll end the syllabus, you'll forget that. So I want you all to do few things at the very end. Don't worry, those things will be covered. With the miscellaneous provisions which I'll be doing now, with that miscellaneous provision, in the last lecture, I'll be going to do all these things which I'm keeping right now pending. Because this is not the correct time to do it. Getting my point? So as of now, whatever was there till Provident Fund, we have completed everything. Okay. Now in Provident Fund, no, there was one concept, if you remember. Let's see, this is your UPF account. Okay. So UPF account was maintained for year 1, year 2, year 3, year 4. Okay. So there was some accumulated balance for all the 4 years. Employees would have contributed every year. Employer would have contributed every year. Interest would have got credited. So this accumulated balance has what? This accumulated balance has employees' contribution for all these years, employers' contribution for all these years, interest credited for all these years. This accumulated balance is having. Now your UPF will be converted into what? RPF account. Now there was a requirement on you to open RPF account for your employees. So will you open a new RPF account, or you will get the UPF balance converted into RPF? You will get it converted into RPF. So now whatever these accumulated balances are there now, you are going to transfer all these balances to RPF. But for doing this, you will have to go and tell the income tax department that income tax department, see, now we have a requirement to open RPF account for all our employees. Okay. But we already have UPF balances. So if you just recognize our UPF balances, so automatically they will become what? RPF. Getting my point? So the accumulated balances will be transferred as what? RPF. So the moment this approval is given, this approval is not given for today. It is given from day one. It is given from beginning. If the approval for this balance is given, that okay, from today, your UPF balance, from today it will be treated as what? RPF. So now these balances are treated as RPF, means that the recognition is granted from the very first day itself. From year 1 itself, the recognition is given. Getting my point? Retrospective recognition given. So tell me one thing. Year 1, year 2, year 3, year 4, all the years, the treatment of RPF was not given. Treatment of UPF was given. But now these balances which are getting transferred into what? RPF balances, they are being recognized from today, meaning that they are getting recognized from day 1 only. But from day 1, the effect of RPF was not given, effect of UPF was given. Just imagine employer contribution, employer contribution, employer contribution, employer contribution. Whatever amount of employer contribution was there for all these 4 years, fully exempted or not, even if up to 12% or more than 12% of salary, entire amount was exempted or not. So can I say in this accumulated balances which is getting transferred, in this transferred balances for all the 4 years, employer's contribution in excess of 12% was already there. Hello? Up to 12% was also exempt, and more than 12% was also exempt. No. So in this accumulated balances, is there any employer contribution for these years which is in excess of 12%, which was already got exempted earlier? Now that is also your salary for this year. The year in which the recognition is given, in that year, this excess contributions by the employer, over and about 12% of your salary for all those years. Yes or no? Even that excess amount for all these years will be treated as your salary. Don't you think? Pay attention here. Pay attention. Interest credited, interest credited, interest credited, interest credited for all these years. At whatever rate, whatever amount credited got exempted. So in this accumulated balance, which is getting transferred to RPF now, in this accumulated balance, can there be interest credited in excess of 9.5% rate of interest? Yes or no? So whatever interest for all these 4 years, which was in excess of 9.5% also, which is there in this accumulated balance, even that is your salary for this year. So out of your transferred balance, you are supposed to take out that amount, which is employer's contribution for all these years in excess of 12%. Out of your accumulated balances, you are supposed to take out that amount, which is interest credited for these years in excess of 9.5%. And this, in the transferred balance, whatever employer's contribution in excess of 12% is there, in the transferred balance, whatever interest credited in excess of 9.5% is there, even this is treated as your salary under section 17(1), and this will be covered by section 7, deemed to be received in this year only. Yes or no? And this will be taxable in the year in which the recognition is given. Same year. Got it, sir? Now pay attention. Here. Watch it out. This is salaries head. Okay, no? Do you remember we did this definition of salary? The term salary is defined under section 17(1) to include. Salary includes 1, 2, 3, 4, 5 and 6. We did till 6th point. Look at the 7th point. Employer's contribution during the previous year to the RPF account of the employee in excess of 12% of salary. Any contribution made by the employer in this year to your RPF account which is in excess of 12%. Is it your salary? Yes. Any interest credited in this year to your RPF account in excess of 9.5%, even that is your salary. Hello? And wait, as per section 7, employer's contribution to RPF account of the employee in excess of 12% and interest credited to RPF account of the employee in excess of 9.5% is, as per section 7, deemed to be received. Got it, sir? Now pay attention here. Again. This G point is done. H point. Any transferred balance in the RPF account being employer's contribution, any transferred balance in RPF from UPF, whatever balance is getting transferred to RPF, any transferred balance, in that transferred balance, any employer's contribution in excess of 12% and interest credited in excess of 9.5%. Yes or no? So in that transferred balance, whatever employer's contribution is there in excess of 12%. In that transferred balance, whatever interest credited in excess of 9.5% up till now, even that will be treated as your salary. And as per section 7, it will be deemed to be received also. See, balances transferred from UPF to RPF account being employer's contribution in excess of 12% of salary and interest credited in excess of 9.5% rate. This is also in this year deemed to be received. Now you know that why I did not do section 7 that time. Why I did not touch G, H and these points that time. Hello sir. Understood? Should I move ahead? So this is your salary and as per section 7 deemed to be received. Hence it will be taxable in this year only. Sure? Should I move ahead? Okay. Now I am moving to the next part. See, this is approved superannuation fund. So just like provident fund, this is also made by the employer. This type of fund is also made by the employer to give some benefit to the employee. Now, what benefit the employee will get? The benefit which the employee will get is on his superannuation, he or his family members will get funds, will get money out of this ASF account. In case of some unforeseen event, for example, my retirement age is 60. So before 60 years of age, right now I'm 55 only, and in 55 only I'm incapacitated to work. I'm not able to work only. So for those 5 years, I could have worked, I could have earned salary, which I'll not be able to do it now. So I will have to superannuate myself. I will have to leave the job. Now who will take care of my family? From where the money will come to run my family? Don't worry, ASAF is there. Some contingency happens. Because of that, I or my family would require money. For example, I met with an accident. I got handicapped. Where the money will come for my survival and my family's survival? ASAF is there. What if I want to get, fixed amount of pensions in the future, fixed amount of money in the future, so that my household expenses are met on a regular basis? ASAF is there. What if I die before the age of my retirement and my family needs money? Where the money will come from? ASAF. See, there is no legal requirement under any law to make this kind of fund. This fund is made by the employer and the employee. They actually come together and they agree to make such kind of fund. But whenever this fund will be made, superannuation fund will be made. This superannuation fund will be made and it will be approved by the Chief Commissioner of Income Tax. It will be approved by the Income Tax Department. Getting my point? And Income Tax Department will grant the approval for this superannuation fund based on certain conditions. Certain conditions will be given. On the basis of those conditions, the approval will be given. And there will be certain conditions. Those conditions will have to be continuously followed. Only then the approval will stay. Otherwise, the approval will be cancelled. So there are certain conditions based on which the approval will be effective. If those conditions which are of recurring nature, continuous nature, if those conditions are not fulfilled, there is a possibility that approval can be withdrawn also. Getting my point? But there is no statutory requirement under any law. Like there was a requirement to make what? PF, Provident Fund. Yes or no? Under a law, there was a law, PF Act, which compelled the employer to make the Provident Fund. There was a law, Employees Provident Fund and Miscellaneous Provision Act, which compelled the employer to make a Provident Fund. There is no legal requirement, there is no statutory requirement under any law that employer should make such kind of funds. So this is made as per the contractual obligation between the employer and the employee. There will be a contractual obligation. And employer and employee both have decided that we want to make such kind of fund for the superannuation. Then this kind of fund will be made and it will be approved by the Chief Commissioner of Income Tax. And the Income Tax Department will put some conditions. Those conditions are continuous in nature. You have to continuously satisfy those conditions. Otherwise, the approval can be withdrawn also. So this type of fund is known as what? Approved superannuation fund. Is it for your benefit only? Yes or no? So will you contribute in this? You have to contribute, no? For your benefit, you have to contribute. From where you will contribute? From your salary only. So this is the employee. Employee will also contribute from his salary. And this is the employer. Employer will also contribute. Periodic basis, interest will also be credited. And at the time of superannuation, a lump sum will be coming out of this fund. Lump sum amount on superannuation. Superannuation means unforeseen event. Yes or no? You leaving the job or you becoming incapacitated means what? Superannuation. So meaning that money will come out of this fund as a lump sum. Whenever that lump sum will come on superannuation, on death, etc., on becoming incapacitated, etc., that lump sum will be fully exempt under section 1013. Forget about lump sum now. Lump sum is a retirement benefit, fully exempt. So, lump sum coming from SPF, fully exempt, 1011. Lump sum coming from RPF, fully exempt under section 1012, but under those situations which I have already mentioned. Okay, no? Lump sum coming from UPF will be taxable in 4 parts. But lump sum coming from ASF will be fully exempt under section 1013. Now tell me, to get this lump sum, will you contribute? Employee, will you contribute? From where you will contribute? From your salary only, no? Is your entire salary taxed? Yes. And out of that tax salary, this contribution is going. Will you give any effect to your contribution? No. No need to give any other effect under the head salary because already entire salary is taxed. From that salary only this contribution is made. So for employees contribution to ASF, no effect needs to be separately given under the head salary. But is it an approved fund? Is it an approved fund? Tell me yes. And in this approved fund, whatever amount the employee is contributing is his investment, for which he will get deduction under ATC. So just like the way you get the deduction for your contributions to your SPF account, your RPF account, you will also get the deduction under section ATC for your contribution to your ASAF account, but not for UPF account contribution. Yes or no? Because that is not recognized. Got it? Should I move ahead? Now, is your employer contributing? Yes. What is to be done with that? I'm telling you, 1 minute. Give me 1 minute. Is there any interest getting credited to ASF account? Yes. So, whatever interest which gets credited, at whatever rate it is credited, fully exempt. This will be fully exempt. Why? Because one of the conditions to give this approval will be that interest rate will be within this limit only. If the interest rate goes beyond that limit, no, the approval is taken away. So this fund is approved means what? The department has put some restriction on the interest condition. Within that condition only, within that restriction only, the interest is getting credited, no? And that is the reason why the fund is still approved. Hello? Otherwise, the approval will be taken away. So interest, don't worry, will be genuine amount only. Will be fully exempt. Now tell me one thing. Employer will contribute to ASF. Now you are supposed to see one thing now. Pay attention. Very important discussion. Your employer's contribution to ASAF account is this much. So during the full previous year, your employer is contributing this much amount to your ASF. Along with that, please add employer's contribution to your RPF account plus employer's contribution to your NPS account. All these three taken together, can I say aggregate amount? So this aggregate amount of contributions during the previous year to your ASAF, NPS and RPF account, if this aggregate amount is up to 7,50,000 per annum, nothing will be taxable out of this. So not a perquisite. not a perquisite. But if this aggregate amount is more than 7,50,000 per annum, then up to 7,50,000 per annum, not a perquisite, but the excess amount over and above 7,50,000, that excess will be a perquisite under section 17 subsection 2 clause 7. Do you remember we left clause 7? This was clause 7. Earlier what used to happen, see, few years back, 6-7 years back, only the employer's contribution to ASF was checked. That if the employer is contributing to ASF and the total contribution is 1,50,000 per annum to ASF account, then it is not a perquisite. But if the total contribution to the ASF account by the employer is more than 1,50,000 per annum, then up to 1,50,000, nothing taxable. More than 1,50,000, the excess used to be your perquisite under clause 7. But they amended clause 7 5-6 years back. And now in the amended clause 7, what is there? Only ASF contribution is not seen. Your employer might be contributing to your NPS and RPF also along with your ASF. So your employer's contribution to your NPS account, your employer's contribution to your RPF account, employer's contribution to ASF account, all these three taken together, if that total amount, if that exceeds 7,50,000 per annum, then anything over and above that 7,50,000 will now be treated as your perquisite as per clause 7. See, the individual effects which are to be given to RPF will be given as it is. RPF contribution in excess of 12% is taxable. Hello, sir. NPS contribution by the employer will be fully taxable separately. RPF contribution in excess of 12% will be separately taxable. But when ASF is also there, so total contribution to RPF, total contribution to NPS and total contribution to ASF all taken together. So for this aggregation, that total is also considered. In this total, those contributions are also considered to find out the value of this perquisite. Getting my point? So separately, the treatment which is to be given for RPF, that is given separate. Any contribution to RPF in excess of 12% will be taxable separately. Any contribution by the employer to NPS will be taxable separately, fully taxable. Yes or no? But if contribution is happening to ASAF by the employer, now that will not be seen individually. Now in that contribution, in the employer's contribution which is happening in ASF, now consider the total contribution to RPF account, total contribution to NPS account. Now add all these three. If the aggregate amount of all these three contributions is more than 750, that excess over and above 750 will be your perquisite as per clause 7. Will you remember this? Sure. What if the aggregate is not more than 750? It is 750 or less. No perquisite arising. So whatever contribution made by the employer to your ASF, no, nothing will be taxable out of that. No perquisite will arise. Because ASF contribution, RPF contribution as well as NPS all taken together is 750 or less. So whatever contribution made by employer to ASF, nothing out of that will be taxed. Ignore the situation. But all three taken together is more than 750, then excess will be taxed. Now wait, is it a perquisite? Anything in excess of 750 is a perquisite. And on this excess amount, which is already a perquisite, on this excess amount, which is already a perquisite, on this excess amount, if there is any some interest or accretions credited, even that interest or accretions will be treated as perquisite as per 17 subsection 2 clause 7a. This will also be your perquisite now. Now, how to calculate these amounts now? how to calculate this amount, how to calculate this interest, clause 7a. That is given in that question number 10, which we are not going to do right now. You just have to take this basic idea that this is taxable as what? Perquisite. Excess is also taxable as perquisite, and any interest or accretions on that excess amount will also be treated as your perquisite as per clause 7a. Will you remember that this is a perquisite, and what is perquisite you came to know? But how to calculate the amount of these perquisites? No, this calculation is very complicated. For that formulas are given. For that many other things are to be considered. Getting my point? I don't want to put you all in that situation right now. So that 10th question which is remaining, no, keep it pending only right now. In the end of the syllabus, we are going to see that concept. Again, we will be doing this thing over there, and that calculation also we'll learn in the end. But right now with salary, I don't want to mix all these things. I don't want to make you feel that you are less confident in salary. Got it? Sure, sir. Should I move ahead? Okay. So this was your ASAF concept. Okay. Now let's come to NPS. See, central government has one scheme, and that scheme, the name of that scheme is National Pension Scheme. All the government employees know they are compulsorily required to contribute there. And the government, meaning the employer, will also contribute for them. But for the employees of private sector, it is not compulsory, it is voluntary. So if the employer and employee both decide, they can also participate in NPS. So in that case, from employee's salary, some amount will go and employer will also contribute. And wait, if there is a self-employed individual, no, that self-employed individual not having any employer, he can also contribute in NPS. But we are not going to talk about self-employed individual here. We are going to talk about only individuals who are employees. So government employees can contribute, yes. Private sector employees along with their employer, if they agree voluntarily to contribute, so a private sector employee can also contribute. So this is an employee. Employee will contribute from his salary. This is known as employee's own contribution. Employee's own contribution to his NPS account. From where he will contribute? Come on, tell me. From his salary only, no? From his salary, some amount will be deducted and contributed. So from his salary, if the amount is going, tell me, anything to be done for this amount under the head salary? No. No need to give any separate treatment. Why? Because from the salary which is getting taxed, from that salary only the employee is going to contribute this. So no need to give a separate effect under salary head. But for the own contribution by the employee to his own NPS account, he is going to get the deduction under section 80 CCD, subsection 1 and 1B. Now the deduction will not be available under 80C. Now a new section is there, CCD. Under 80 CCD, subsection 1 is there, subsection 1B is there. Under those two subsections, your contribution can be claimed as deduction. How much? That we are going to learn in CCD 1 and 1B. But right now, please remember, your contribution to your NPS account is always out of your salary. No need to give a separate treatment under the salary head. Take the deduction from your GTI under section 80 CCD, subsection 1, 1B. Done. Will your employer contribute? Yes, your employer will also contribute. So can I say employer's contribution is happening to your NPS account? Single rupee contributed to your NPS account. Even a single rupee contributed. Entire amount is your salary. 17 subsection 1. Please check. Here, the definition of salary. Do you know? The term salary defined under section 17.1 to include. The term salary includes point number I. Please check point number I. employer's contribution during the previous year to the NPS account. Whatever amount contributed by the employer is your salary. Is it becoming due right now to you or going in your NPS? It is going in your NPS. Later on, when you will attain the age of 60 or more, that time this amount will be coming in the form of pension from the government. And that time it will be IFOS. That time it will be IFOS. So whatever pension which you are going to later on receive from NPS, that will be your income from other sources, taxable there. But wait, right now whatever your employer is putting, is it becoming due? No. Is it received by you? No. But still, this is your salary in this year. And as per section 7, deemed to be received also in this year. Please check section 7. See, section 7, incomes deemed to be received, contribution made by the government, central government or any other employer in the previous year to the NPS account of the employee will also be deemed to be received in this year only. So as per section 7, this is deemed to be received. So if it is deemed to be received by you in this year only, meaning that this contribution made by the employer in your NPS will be taxable under the head salary in this year only. Hello, sir. So how much your employer is contributing? He is contributing 10,000 every month. So 10,000 into 12, 1,20,000 contributed in this year, 1,20,000 will be taxable under the head salary. Why taxable? Because it is 17(1) salary also, and as per section 7 deemed to be received also. Got it? So can I say employer's contribution? I will have to see employer's contribution. First, it will be taxable under the head income from salary. This is the first effect. Now tell me, will you show this amount as your salary? So in your salary statement, whatever salary you are receiving, that is also given, and this amount is also considered as your salary. Now your entire salary, your salary income will include this 1,20,000 also, no? Now tell me, whatever income you are having, in that income, this contribution by the employer is also treated as your income. Is this amount which is your income already contributed to your NPS? So take another deduction under 80CCD. Now for the employer's contribution, which was already considered as your income, the same amount will be allowed as a deduction also. First consider this as income and then take the deduction. Hello? First consider this amount as income and then take the deduction. Where you will take the deduction? Under section 80CCD only. But now the deduction will be available under section 80CCD subsection 2. Hello sir, your own contribution from your salary will be CCD1 and CCD1B. But your employer's contribution, which is your salary, that amount will also be available under 80CCD, but under section 80CCD subsection 2. Another deduction you will get. So wait, please pay attention. Now from your whole income, whole salary income, your salary, from that whatever contribution was happening as your own contribution, that is available CCD1 and 1B. Out of your whole salary, some part was employer's contribution which became your salary. For that also you are going to get the deduction under 80CCD subsection 2. How much deduction you will get under CCD2, CCD1 and 1B, that we are going to study later on. When we will be doing the deductions, that time I will tell you that how much deduction you are supposed to take here. How that will be calculated. But right now, did you understand? For salary purpose, no, you are supposed to remember only this, that whatever contribution your employer will make to your NPS account this year, that is to be taxable as your income from salary. That's it. Later on, when you will calculate your total income from your GTI, you will get 80CCD deduction, CCD2 deduction from your GTI for your employer's contribution also, which is shown as your salary now. Getting my point? And for your own contribution, which is already taxed as your salary, you will get a separate deduction, CCD1 and 1B. Got it? So this was your NPS. And with this NPS discussion, everything is done from salary. Now wait, there is one more thing, 17 subsection 3. Do you remember profit in lieu of salary? We have already covered this. We have already covered this entire 17.3. Along with what? The discussion of the salary chapter. Few places. Profit in lieu of salary came, no? UPF account, lump sum coming. In that lump sum, employer's contribution and interest on employer's contribution. What was that? Profit in lieu of salary. Do you remember retrenchment compensation, VRS compensation, for which you get exemption under 1010B and 1010C, but that was profit in lieu of salary. On your termination or employment contract terminated or employment contract modified, whatever compensation coming to you, what is that? Profit in lieu of salary. Any amount now you get in lieu of your salary. This, against the salary, this profit is happening. Against the salary, this profit is happening. Is what? Profit in lieu of salary. Now, for example, your employer is giving you some awards. Best employee award, and he gave you 5 lakh rupees. That 5 lakh could have been given in the form of salary only, no? But instead of paying salary, the award is given. This profit is made. This is a profit in lieu of salary. Getting my point? So 17 subsection 3 is nothing but instead of profit, if the employer is giving some profits, so that profit happening to you, some benefit happening to you in lieu of salary. Salary not given. Instead of salary, this amount is given. That is what profit in lieu of salary. One point is there, Keyman insurance policy. Some coming from Keyman insurance policy is also your profit in lieu of salary. Getting my point? But that thing I will be discussing with IFOS. So with IFOS, this discussion for Keyman insurance policy will also come. So don't worry about that right now. 17.3 is also done, fully done and dusted. So entire salary chapter from my side is over. So from salary, two things are to be done. Two things are to be done. One, the calculation of this amount calculation. How to calculate this amount? 17 to 7 and 17 to 7A. How to calculate this amount? The last lecture, miscellaneous part, miscellaneous provisions will do, no? With that, the calculation will be taught there. And second, relief under section 89. That also will be done in the end. So that these concepts remain fresh in your mind. That's it. The only reason is that. And I don't want to confuse you in many things over here, right? Whatever was required for salary, every damn single thing is done. We have not left any single thing except for these two things. Getting my point? So with this, salary chapter is over. We are now going to start the new chapter. Okay? So take a break for 15 minutes. After 15 minutes break, we'll be starting with the new chapter PGBP. Okay?